welcome to Crypto Pulse Weekly. I am just waiting for my YouTube to load. Okay, fantastic. YouTube loaded. So, good evening, everyone. Welcome to Crypto Pulse Weekly. I know I've not been doing this as often as I should have. I'm considering maybe I should do shorts, YouTube and Instagram shorts, then do Crypto Pulse Weekly like once a month or something. But I've not concluded on that particular perspective yet. But to start with, I think the first thing I wanted to discuss today is something that is in the news, but it's not in the news. Like it happened yesterday, and nobody seems to be making any noise about it. So there is something called um, Fed now. I don't know if you've ever heard about it. Fed now is the UK equivalent of faster payments, and we already have something like that in Nigeria through NIPS, which is an electronic online settlement platform that allows um, basically that allows banks within the jurisdiction to share a ledger. Um, I don't want to go. I don't want to go into accounting here, but basically, what they do is there's a joint ledger that is being held by the issuing apex bank. In this case, Fed. In the case of Nigeria, it's the central bank. In the case of UK, it's the Bank of England. So the common ledger is being held by the Bank of England. Let's use UK as an example, since I'm in the UK right now. The bank has the ledger. In that ledger, everybody has debit and credit entries. So essentially, what happens is the reason faster payment goes so fast is because it only needs to authenticate the sender's um, proof of funds and the destination address. So on some of the banking apps here, when you put in the details, it will immediately tell you that this detail does not match. One of my banks, for instance, will say the detail you are sending does not match the name on record. It will give you the name on record from the database, and if you made a mistake, you can correct it. And if the number doesn't exist, it does an instantaneous check even before you send the money. So it knows all the bank account numbers that are present within every bank, just like we have the BVN and the unique numbering system, the common numbering system that we have in Nigeria. So you're able to send it because once it's validated the destination, it doesn't need to validate the other person any further. It just posts the money, and usually like 30 seconds to 5 minutes most of the time, the money is reflected with the other bank. So I mean, it happens for Nigeria. I don't know how fast it's in Nigeria, but it happens here 30 to 5 to 30 minutes. So the US has been deliberately sitting on that technology. I mean, in terms of technology, the US is pretty advanced. They have probably one of the most advanced military in the world. So for them to be operating a clearing process of 2 to 3 days or 5 days from bank to bank, sometimes even within the same state, look like a very deliberate, very, very deliberate act that has been going on for a long time. But obviously, because the rest of the world has moved on significantly now from those days of 3 days of clearing, they are forced to change. But beyond that, so let me show you the caption. So this is what the caption looks like. Federal Reserve officially launches FedNow instant payment system for 9,000 banks. Number one question is why now? And people who question stuff sometimes they think they are crazy. It's not that they're crazy. It's just that if you understand the why, then you understand why the timing is why the way it is. So really, what they're trying to do right now is they're trying to create the framework to be able to effectively and seamlessly migrate to the CBDC. CBDC is central bank digital currency. Um, Even though if you go around, they did say that they are not related to a digital currency, and that for them to, create a digital currency, they will need congressional approval. Congressional approval is like that. If it's something that the Fed wants to do, congressional approval is like that. It's not a roadblock. That's what I'm saying. So really, the outlook here is that the Fed is trying to create the bedrock on which CBDC will be rolled out. And I've explained CBDC a couple of times, but for people who have not heard me say it or talk about it before, CBDC is central bank digital currency. It's not the same thing as the regular cryptocurrencies that we have. It's similar in the framework, but it's not the same thing. What I mean is similar in framework is that it works on the same underlying technology. So CBDC works on the underlying technology of the blockchain, but it's not the same. So let's take a blockchain like Ethereum, or Ethereum is a good one. Ethereum is a good one actually, or BNB. Now, that is a blockchain that has, what you call nodes. Nodes are like online computers or servers that are connected to the system or the network, supporting the network. The way each of the blockchain application works is that it needs two or more. It's almost like prayer of agreement. It needs two or more for the blockchain to work. And once you launch it, as long as there are two or more people on that blockchain will continue to propagate itself. That's the principle on which Bitcoin was built, and that principle has been used to build literally every other cryptocurrency. However, in the case of CBDCs, the nodes are going to be the central bank's own servers. The users, who are like mini nodes, are going to be the banks. So what then happens is, depending on the framework that a country adopts, the country can want to adopt a framework that looks like that of the Chinese government, which is the government servers are the nodes, the banks are users. Each of the banks have ledgers or wallets. So each of the banks has a big wallet, then a sub wallet to each of the customers. So what it means is that the government has visibility on everybody's wallet, and everybody's on the government's network. So just like we saw in Canada, I think last year, was it last year, that the truck drivers were striking and they blocked their accounts? They will be able to do that more efficiently, and at the snap of a finger, you can get it done. So again, not to sound like a conspiracy theory, but there's been many attempts. If you read human history, there's been many attempts to consolidate humanity into one world governance. I talk about this from time to time, just so that you understand the underpinning psychology and the frame of mind that is pushing everything that's happening in global politics and economy. So this is not the first time that the world is trying to push towards, a world government of some sort. But this time is going to be different because everything is going to be in place, or almost everything is going to be in place. The technology is going to be in place. The chaos that is needed, the level of chaos that is needed, is going to be in place. I'll talk about the chaos before going into, going back into crypto. So I talk from time to time about World Economic Forum and what they're doing. Very powerful problem. An NGO, quote and unquote, that makes suggestions to the government. No, they own most of the government. What do I mean by that? Most of the leaders of the government belong to their committees. So they tell them what they want to implement, and they tell them to go and implement it. They said they were running a simulation on a pandemic scenario, for the global pandemic scenario, to prepare the world for a global pandemic. They ran that simulation in July of 2019. COVID hit in December of 2019 and the whole of 2020. So I don't want to go into the authenticity or legality of World Economic Forum, but I usually pay attention to what they're saying because those are the people that are the power brokers of the world. So whatever they're saying, they either already have the framework of how they're going to do it, or they're already in the works of doing it. So two things that picked up from World Economic Forum this year. One is that they want the world to migrate to digital currency. And in fact, they were saying, it will be best implemented under the skin. That's the word they use, under the skin. I'm a Christian by faith, so I understand some things. When you say under the skin, you are almost directly making reference to Revelation, the book of Revelations in the Bible. But that's not the topic for today's discussion. But they put out that intent that the world needs to go to CBDC. Two, they put out an intent that there might be a scenario where you have a global electronic shutdown. It's almost like you could think about it as a nuclear blowout or a nuclear bomb. So usually when there's a big nuclear bomb, it wipes out all the radio and electronic circuits in the vicinity of that bomb, because ionizing radiation has some science that it messes up the electronics, either completely destroying the devices or temporarily shutting them down. So again, I'm not trying to be a conspiracy theorist, but I'm just telling you inferences from what's going on. So the likely scenario that we have very soon is, either somebody launches a nuclear weapon and then they use that as an opportunity to trigger a global virus attack. That's exactly the scenario that World Economic Forum is playing at. Why am I telling you all of that? I'm telling you all of that because I have information that I get, that I see online, things that I read, and it's only pointing in one direction, that there is an intent for more democratic power grab. And for you to achieve democratic power grab, you need chaos, you need problems. For instance, there will be no election in any country if that country is going to war. Take Ukraine, for instance. Ukraine is not going to do any election because they are at war. They are really being battered. So in the same way, if there is, just like the election in Russia next year is not going to hold because Putin is at war. It's it's martial laws or emergency authorizations that happen during this period. So what this is pointing at is this CBDC is lining up the government for an hasty rollout, not an hasty rollout, I mean it's been planned, but an instant rollout of central bank digital currencies. So everything we've been saying about Bitcoin and crypto will all suddenly come to pass. Because what it then means is the government will try to outlaw all other cryptos, especially Bitcoin. If they can't outlaw it, then they will have made sure that most of the Bitcoin is not in circulation. In brackets, BlackRock ETF for Bitcoin. Like I talked about this about 2 or 3 weeks ago, that the biggest financial institution, let me put them, they are the biggest financial institution in the world, has put a tender forward to have a Bitcoin ETF. And I said that the Securities and Exchange Commission of the US is too small to stand in the way of BlackRock if BlackRock wants a Bitcoin ETF. Two things can happen. SEC will give an excuse and delay it, and the market will tank. But the day that approval comes, there's going to be serious trouble for the price of Bitcoin. It's going to go crazy. From that day onward, it's going to go crazy. And it's very simple. Everybody will suddenly realize that this thing is for real. Like, it's not hypothesis anymore. This thing is for real because now there's an ETF. And what the ETF does is that it allows people to buy Bitcoin without actually holding it. Now, the third scenario, which is like a hybrid, is that SEC can come and say, okay, we approve your spot ETF. However, you don't need to settle in Bitcoin. So the proposal that BlackRock has put forward is that they're going to have Coinbase as their custodian. So they can say, you know what, you don't need to settle that Bitcoin in, I mean, that ETF in Bitcoin, you can always settle in the US dollar equivalent value. What that means is that it becomes like any other ETF. So fingers crossed on that. But over and above that, I think this is the biggest news that's happened in the crypto world this week, and it's just slipped past. You probably not know about it if you aren't following it before. This singularly will roll US into CBDC like that. And I told you, I think that was maybe last month or 2 months ago, that the government of the UK has already given a timeline that 2030 they are going to CBDC. I think 2030 is going to be a very interesting, probably tumultuous year, because so many things are beginning to line up. On the one hand, you have the climate issue, and all the noise that's going about the climate. Very soon, you know, people will be made to have climate credits. I don't know if you know about that, but governments, I mean, companies already have what we call carbon credits that they can accumulate based on their sustainable development or sustainable, what's it called? They call it ESG, environmentally sustainable goals. Based on their ESG compliance, they're able to get carbon credits. Elon Musk has been able to make profit from Tesla, despite the fact that they are running at a losses for more than 6 years because they have ESG credits. They have carbon credits that they get automatically from the US government by the reason of producing electric cars. So understand that climate change is not about science. Climate change is about power and it's about money. You can argue, you can disprove with me and say, there's no fact. I can, can have a separate debate about that. But it's all about money and power grab. And I think we're getting close. I mean, if you go through the news, you see all the disasters are happening everywhere, hot temperatures. The funny thing is that I shouldn't be going into this. I need to go back to crypto. Sorry, let me go back to crypto. I don't want to talk about climate change. I beg. Anyways, we're likely to enter an era where the same way you have a credit score, you have a climate compliance score of some sorts. And that's also moving along the same track with CBDCs, moving along the same track with digitalization of money. There is already a technology in, I think it's in China. Yes, it's in China, where you can just use your hand as biometric identification. Just once you register your hand, I think they're using it in the train station. I saw it on, I think, Al Jazeera a few days ago. Once you scan your hand, all our hands have prints. What's it called? Micro, not they're not really micro, but fine print, like fingerprints. Our hands are as fingerprints. So once you scan your hand, the machines reads your hand at a microscopic level and takes the imprint of your hand. Then it ties that imprint to a wallet, a digital wallet, like your bank account or something like, or card account in this case. So all you have to do is put your hand there and the door opens. I mean, it looks like magic, but it's the technology is here already. Like you just put your hand and you see the turnstile will open for you and you can go through. So things are gearing up in the world that speaks to a lot of things. But talking about crypto, this is a very important one because on the back of this, the government of the United States will be forced to take a position. I think the position will not be favorable for crypto, but because there is likely to be some serious disturbances next year, the market is likely to sharply drop, then move up. Why do I say this? And I say this because, again, I'm getting some relatively uncorrelated information, but that speaks to some things that the governments are trying to do. One of them is the budget. So you can go and check the budget of the United States for the next year. You find a 10x budget for things around defense relative to this year's budget. Usually it's 20% over. So a 10x budget means there is an expectation of a major fracas somewhere. I don't know what it is. I don't know where it is going to be, but it tells that there's something. It foretells that there's something going to happen. Usually when you have that kind of move, and For people who are interested in stocks, I think defense stocks are the way to go because they will blow through the roof. Naturally, they will blow through the roof next year. I think I'll probably be looking towards November before trying to see anything to do with defense stocks in the US. But definitely, defense stocks in the US are going to blow through the roof next year because that budget already telling us something that we don't know yet. However, back to our discussion on Fed now. So Fed now officially makes US at par with everybody else in the world, but also places them on the rail ramp for central bank digital currency. Now, central bank digital currency may not favor crypto as we will expect it to, because the government will want people to use their own ramps, meaning they want to see the money, they want to be able to see everything. If they're not successful in getting everybody off crypto and Bitcoin, then they will put what you is it sniffers that will call them now, or gatekeepers at the on ramp and off ramp platforms. These are in layman terms the exchange platforms where you can exchange your Bitcoin or your crypto with a central bank digital currency, and that's where they begin to hammer at people until, I mean, depending on jurisdiction, until they're able to wrest power from people for using other cryptocurrencies. But understand that it's going to happen, but it will be this ETF. And I don't know if you see it, but I was seeing somebody complaining that it is irrational that he's gone back to say that Tesla will now start accepting Bitcoin. Of course, they made a serious cash out on the price of Bitcoin, major cash out in billions of dollars when Bitcoin price was coming down, because when they bought, the price was like 27K, so they sold like maybe like 30 something. So even at 10%, it's still a major profit for the company that invests at that level. So understand that it's that cycle is going to repeat itself, and we need to prepare ourselves. We need to position ourselves in such a way that we're able to take advantage. Yeah, we need to position ourselves. I was thinking about whether I should say something or not. We need to position ourselves in a way that we should take advantage. We need to also have some powder, some spare powder in the gun, as they say, especially for early next year. I think, and I strongly believe, personal opinion, that there will be a sharp drop around the time of the halving because of a global economic problem or something major. I suspect that April 2024 will be that time. So at that time, it's better to have some money on the side, waiting for that sharp plunge. I don't know how far the plunge is going to be, but there will be a major plunge. I foresee that there will be a major plunge April next year. Once that plunge happens, that's the trigger to get all in, because from that point on, the market is going to go crazy, and the market is going to go crazy faster. So usually, what you have is 6 to 9 months of serious pump after Bitcoin halving before the market calms down. Then I've plenty another pump before it goes up finally. But because everybody sort of knows that now, that cycle is going to be faster. So I suspect that we might actually see the peak of the price of Bitcoin before December 2024. So we're not trying to time the market. We just want to make sure that we're well positioned. As I said, my global estimate for the peak price of Bitcoin next cycle is 90K to 120. Now, it will get to 90K. I don't think there's any doubt in my mind as to whether Bitcoin will get to 90K, because 90K will just be 50% or less of the last peak. So I'm sure it's going to go to get 90K. What I'm not sure of is how far it's going to go, because that depends really on the market forces and market makers at the time. So how do we prepare? One of the ways to prepare is to dollar cost average if you already have positions. Secondly, to try and allocate something on a monthly basis. Right now I think of finances as as a corporate. In the corporate organization, you have three statements. You have your profit and loss, you have the bank balance sheet, and you have your cash flow. So based on your cash flow, you make a decision on how you want to arrange your profit and loss and your balance sheet. What I'm saying is that, and it's not financial advice, but it's just inferring from how corporations work. To put something aside, um, one for Bitcoin, two for crypto, and three for all other savings, or all other things that you want to save for. And the reason I say that is there's going to be a massive shift in the transfer of wealth because of the things I've talked to you about. And like I said, and I've said on many of my courses, that we are witnessing a transgenerational change in the democratization of capital, and that comes with a lot of wars. Democratization of anything comes with war. Democratization of knowledge was what led to hundreds of years of war in Europe. So I'm not fooling myself to be saying that there won't be conflict here and there, but understand that there is always opportunity in chaos, always opportunity in chaos. I had a thought today about something when I was in the bathroom, and I was thinking to myself that, why did I never think about this thing? Then I realized that, I didn't see the chaos in times past as an opportunity. I saw it as, problem. And because of that, I approached it as a problem. And because of that, everything I was seeing was problem as opposed to seeing opportunity. I know that this sounds like a bit of philosophy, but understand that the way you see things and the way you interpret things determines the value you can extract from it or the outputs you can get from it. So if you see turbulence on the market and your first thought is I'm losing money, every other thought that's going to come at the result of that is going to be an offspring of that original thought. I'm losing money. So if you say I'm losing money, then everything you'll be seeing around is losing money. If you say I'm gearing up to blow and make a lot of money, understandably, your mind will begin to see differently to the things that are happening. So, what is happening on the market, if we check the price of Bitcoin, is nothing we've not discussed. I mean, we've talked about this like since the price got to, I think, 30K the first time was when I talked about it. When it came and didn't break it and it was struggling here, I mentioned it again. Now we have a confirmed, what I'll call a confirmed trend reversal pattern on a daily chart. Now, from the technical point of view, what it means is that this trend here is about to go down. There is no doubt about it, and I can prove it to you with three confirmations. Usually, you need two on a very high time frame to make that conclusion, but I can prove it to you with three. One is what you call convergence and divergence. I will explain that shortly. Two is what you call the candlestick pattern, which is basically just showing the behavior of the traders on the market. And if you take a look at this, what this is showing us is that the price is attempting to make a high, whereas the oscillator for relative strength is making a lower low. So there is disparity. That disparity is an automatic signal for institutional traders that the trend is about to turn. Another one is if you take a look at this, let me expand this. You see that these two candles the differ in that the down candle sort of swallows up the up candle a bit. When you see this and you see that the price has not been able to go back to the original opening of the blue candle or close above it, automatic confirmation. You can see the price has tried for 1, 2, 3, 4, 5, 6, 7, 8 days. Yesterday was the 7th day that it attempted to go back from that dip. This is an automatic trigger to push the price down. So expectation over the coming days and weeks is that the price will attempt to find another level below. And at that point, in fact, hold on a second. I just saw something now. At that point, Let me give it to you. Let me give it to you. Let me give it to you. So here is it. 28,000 is guaranteed. Guaranteed, like it's going to happen because the price has tried so much to keep in pace from the original drop that happened on the 14th of July. This is 7 days after. It's not been able to do that. So today is Friday. Yes, there might be some attempt to push it back up. Even if it goes back up to 30K or 30K 600 and doesn't close above it, then guarantee 28K is done and dusted. My suspicion is that there will be an attempt to push the price to 30K 687, which is at least the 50% retracement on this move. If that happens and it doesn't close at that price, then automatically the downtrend is in force. How long will the downtrend be for? I don't think it's going to be for long. But judging by the price behavior of the market before that time, which is what we had here around the 22nd and 23rd of June, this kind of upward movement is what you call a market inefficiency, meaning there were no sellers. Everybody was buying. So the price rapidly went up. So this has to be corrected for. It also plays out in another way, like gaps. I talked about gaps, CME gaps before. When you have gaps in price, that gap is almost always going to be traded again because it meant that nobody put bids at those levels. So everybody's always watching out for them. So eventually they will get filled. So this is the younger brother of a gap when you have an upward and steep rise. So naturally, my expectation is that 26,000 is the bedrock. And the reason I say that is you can see that here. When the price went suddenly from 27,800 here and went to 30,000, it came back. It even came back lower. So 26,000 mid-range, longer term, 20,000 short term, longer term 25,000, or mid-term, sorry, 25,000. If 25,000 holds, then the market will continue to go from there. If 25,000 does not hold, of course, 19K is the home. Of course, 19K will make a lot of people freak out, but it provides significant opportunities. So that's what I wanted to talk about on the charts. I have questions. A lot of people made so much money during COVID. Who are they buying from? Someone said a lot of people make so much money during COVID. So two things. The way I've seen institutional investors place trades on the market is that they look at critical levels. What I mean by critical levels are things in terms of support and resistance. Area in the history of the price action where the market has been traded significantly. If we are to do that on this chart, and we can do that on this chart, this is a daily chart, it's a long-term chart, so it's extremely stable. So if we're saying we're looking for areas of interest, this is a good area of interest. This point in the short term, 25K. Why is 25K an area? I've talked about 32K many times, 33K. Why is it an area of interest? It's very simple. The reason why the market is reacting when it got here is because 32 to 30K has been a strong area of interest for a very long time. So you can see my charts going back all the way since the first time the price reached that level in December of 2020. So it's a very key level of interest because a lot of action happened there. So what institutional investors do is that they place bets or they place what you call pending orders at those points, because when there is chaos, that's the first place the price is going to go. So if there's to be a very wicked sharp drop today on the market in the price of Bitcoin, automatically 25K natural destination, 25K second level is 20K, and we can go back. Let's do this exercise to explain what I'm saying. See, this is 20 to 18K level. It has been traded significantly in 2022. The price dipped below it for a few weeks, then jumped above it and confirmed its uptrend by testing it again, and then the price took off. So if the price is going to drop now, guaranteed, those are three, I mean, two guarantees levels. If I can break it into three, but they are similar. So 25K, 23K, 21K, and 20K. It seems to follow the round numbers, but naturally, that is how institutional buyers or sellers make trading decisions. So they are not buying at that point when the market is moving. They already placed their buy orders. So what's just happening at those points is that those orders are getting executed because they already placed the order that when the price gets to 20,000, buy 500 bitcoins, something like that. So in COVID, during COVID crisis, for instance, because the price dropped sharply, the institutional investors were waiting. They were waiting at the bottom because they saw the gaps in the market. So they'll place a trade that's maybe 50% off. They'll place a trade at 100%. They'll place a trade at 80. They place it at 60%. So when the market drops, those are the guys that are catching the price literally. So when they buy the red, which is when the market drops, automatically they're going to sell the greens because the herd mentality is to want to get into market when everything is looking good. But they've conditioned the psychology of their actions to think otherwise. It's a learned behavior, like I said, and it takes a while to get used to that kind of behavior. But I think it's worthy of learning. Just a very good example that I use is that many of you here, if you see blood, the first thing that comes to your mind is, "Yay, somebody's dying," or this is a very, you know, this is a very disastrous situation. So some people will even faint if they see blood. But to an emergency nurse or to an emergency doctor, blood is adrenaline. Because if he sees blood, he knows that now it's action time. We need to do something. And naturally they swing into action, applying cold compress, trying to suture, find the bleeder. Naturally the mind is conditioned to look out for that trouble and fix it. And it comes with that's why I said it comes with training and it comes with practice. If you're not used to chaos, or if you're not used to profiting from chaos, or understanding that chaos is opportunity, then the first sign when there's chaos is to run. But when you see chaos as opportunity, especially on the markets, then you know that it's the time to take position. So I've just given you, institutional security 101. We don't know who made the money, doesn't made the money. Yeah, yeah. I mean, significant people made a lot of money when COVID struck. If I remember, I remember trying to raise funds, and people didn't believe me then. In retrospect, if I had raised that fund at that time when it happened, if I it wasn't even at that time, it was after COVID when the price started rebounding. If I had raised that fund, at least 50x, I would have made 50x from taking position on the market because I was cash trapped at the time. I would have made 50x minimum because it was a very, I mean, to give you an example, I know I follow somebody on Instagram, that on Twitter, that the guy he didn't go to any school. I mean, he was an apprentice here in the UK, and then he left. When in Nigeria, he said, "You have not done freedom." He now left. He left the apprentice shop because he said he didn't like what they were doing to him, and he was making YouTube videos. Then he started making crypto videos, and when the price of Bitcoin crashed during COVID, he said he sold his car, borrowed money from his dad, something crazy. I think he raised like maybe 20K or 50K during that time, and went all in after that crash. By the end of the bull run, he had bought, what am I saying? He bought a Lambo before the bull run even ended. He bought a Lamborghini. Then when the bull run was winding up, he bought a house, started a company, and enlisted to become a race driver, became a race driver, and it's very expensive to become a race driver in the UK. Became a race driver. He did so much, and I kept wondering, like, is it from this same, and this was somebody that at the end of the former bull run, which was 2018, they hacked his wallet, stole all his money and all that stuff. But he bounced back relatively easy, like very easily, on the back of just investing during the time that there's absolute chaos. So understand that even though the price might drop now, If the price ever touches 20K again, all in, just go all in. I mean, just go all in, because what will then happen is there will be an astronomical move, because everybody will just suddenly see that, oh, there's opportunity after the price has recovered, and then everybody will want to start to scramble to get in. By that time, to be almost halving will come. There will be a small drop, then the price will just shoot up by the same amount. So halving is the drop in production, right? And the drop in production doubles the price, which is the cost price of Bitcoin. So the cost price of Bitcoin, I used to have that thing. No, people, not that people are not buying. So let me answer. I'm seeing some question on the chat. Uh, no. So usually what happens is this, and this is true for crypto. It's true for stocks. It's true for ETFs. It's true for even forex. There are market makers who are the people that are producing like serving as a platform. We call them market makers because they're like the hosts for the market. Then there are participants, buyers on one side, sellers on the other hand. And what you see on the chart is the result of the interaction between buyers and seller and the market maker. So the market makers too take positions because they are market makers. They see opportunities. They take positions like everybody else. So usually they take positions on both directions, and then wait to see which one is going well. So market makers take positions just like everybody else, but because they have deep pool of liquidity, they don't usually get affected by the fluctuation of price that normal traders get affected by and need to close out for stop loss and all that. So when there's a crash, everybody's selling off. If there's nobody else, usually there's nobody else on the buyer side to take off the seller's position, the market makers themselves will be at the bottom of the price. So you can see a price drop crazy low, like maybe do like I don't know, maybe like 200% drop. Then all of a sudden you see that it goes back. The reason it goes back is because, one, as market makers, they have floor prices that they've set. So when the price comes to that level, they just take up the offer. And when they take up the offer like that, they bought at the lowest price possible as market makers. So once everybody sees the market go backward, which was what I was trying to explain earlier on, everybody wants to rush into the market. So they join in pushing up the market back. By that time, market maker has made money. Everybody else is just coming and market maker has already made money. So usually in a crisis situation, what happens is everybody sells off in panic. And then the market makers and the deep, psyche traders are also picking up the market from bottom. There will always be buyers and sellers, especially in a highly liquid market. When people are buying and not selling, you see the price spiking up. When people are selling and not buying, you see the price crashing. And for every crash, there will always be a rebound, or there will always be a recovery. In the same way, the recovery that started in January, let's say it started in November actually, November last year. The recovery that started in November last year seems to have gotten to a peak now. There is a possibility that, sorry, let me switch this to weekly to make sense of it. So now, yeah, this weekly chart is just Bible. So now the price has exhausted the move. It has exhausted the move from November last year. November last year from now is how many months? 9 months, right? We're in July. Yes, so 10 months. So this move is exhausted. It's taking 10 months, but this move is exhausted as it is right now. A healthy rebound from this move will be half of this. So let me use, where is that stuff? Let me use this, its range and price. So done 238 days from November last year. So what I'm saying in all my long English is that a healthy rebound should take the price to 23K. at the minimum, a healthy rebound on this move on a long-term frame. 23K is when we should start to see some serious interest in pushing back the price of Bitcoin. Now, if that doesn't hold, then the price will go back to the original floor, which was 18 to 20K. So what I'm saying is, as Jesus would say, do not let your heart be troubled. Do not let your heart be troubled when you see the price behave in ways that you're not familiar with. There is a method to the madness. That's my thesis. There's a method to the madness when you're looking at the market. There's a method to the madness. There's a way the price is behaving. And like I said, now that this is exhausted, I'd even forgotten about this, my analysis on the charts. On a Fibonacci level, price is exhausted. It's going to come down. The question is how low is the price going to come? Too many things supports 23K. Too many things. One, that 23K is also another zone on the weekly level where there's been a lot of interest. So you can see two tops happened here at 23K before the price broke through. So 23K will be a good region to reevaluate the validity of the price, if I may use that word. So if it breaks through 23K, then it will likely go to 21K, which we talked about earlier on, then to 20K, and then to 19K. 19K will be a good spot because the last time the price went back to 19K, it got bought up like mad. So I will expect that there will be massive institutional orders sitting at 19K if he ever gets there. But for now, I think 23K is inevitable. It might take another 3 months to get there, and the price might be behaving in a rational manner. But there's something called market structure, and that's exactly what I'm looking at here. Market structure dictates that the price will come down by at least 50%. If it doesn't make 50%, then it will just try to go back to 32K, which is already weakened by all these trials. So how do we play this? I will wait for it to come back. Like I said, I told somebody I can't remember, he's not on the call today. I told him to sell his Bitcoin to, I hope he's not bought back though. I told him to sell his Bitcoin to stablecoin because I didn't think that, in fact, that was in April, I think. I didn't think that the price was going to make any significant gains. And the price will always find a way to move, either up or down. But right now, it's just a matter of days before we see that pullback. So I'll be careful not to try to jump into the markets in the next few days because we need to see the downward path or the downward leg of this market structure play out very well before we can say that we're going back upward. And like I said, oh my God, everything is screaming. Everything is screaming reversal. I don't usually do the analysis of the charts before coming online because I think it allows me to be quite objective and look at it. It's a fresh pair of eyes. Everything about the market is screaming reversal. I just told you about a common indicator, which is divergence. There's divergence here again. There's divergence here on the weekly chart. Divergence on the weekly chart. Let's go to 4 hours. If you find it on 4 hours, then it's all over. It's not on 4 hours. It's not on 4 hours. What's going to happen? So it's not on 4 hours. So my gut tells me that it's going to try to push through to like 32K. It's done 31, 806. It's going to try to push 32K one more time. By which time this trend downward might not be as high. It might not be as high as this point on the oscillator. Once that happens on the 4 hours, the coffin is sealed for the reversal price of Bitcoin. So I wanted to talk about how to identify a good project, but I don't think I'm going to be able to cover it fully today. But two things that I want to talk about. in identifying a good project. One, in a normal investment, they will say capital structure, but in crypto markets, we call it tokenomics. And what we mean by tokenomics is where does the wealth sit? Who is holding the biggest pot of gold? So I talked about this some time ago, but let me show you with CoinMarketCap. So if you have a project, let's say, I don't know this project, Bar and Preach. I think I've seen it before sometime, but let's use that project as an example. So the project is an Ethereum token, and it has double certification. What is their use case? It's supposed to be a risk management token launched in 2020. So beyond all of this, so it was launched essentially at the peak of the market. Oh well, before the peak of the market. But two things that stand out here is that one, this token has not gone back to its all-time high. Even when the market peaked out in 2021, it didn't go back to all-time high. It just briefly went off, maybe above the open price. That's one. Two, I want to see what the supply looks like and where the distribution lies. One is total supply, maximum supply, both at 10 million, which somehow explains why the price is above $1 currently. Then circulating supply is 79%, which is fairly okay, meaning that the amount that is not in supply, that is sitting with the owners of the token or the people that created the token, is now about 21%, meaning that they can issue that out to make profits, essentially. So they can cause, of course, the damage will be more than 30. The damage will probably be like 200% damage if they were to sell all their token. So there's something also called total value lock, which is the amount of people that are holding it and the value of what they are holding. Now, there is a market cap / total value lock ratio. I'll talk about that later. But what I want to see is who are the guys holding it. So if we go to Etherscan and look at this token, usually we'll have a breakdown of the ownership structure of the token. This is, it's almost like looking like, you know, stock and a company and its holding structure and all that. So same thing, 10 million, as earlier said, there are 11,000 holders. And if you want to look at holders and see what the nature is, so you see Binance has 23% of the holdings, and then another wallet has 13%, then Arbitrum has 5%, then this I think belongs to maybe the original developers, then like that you have 3%, 2%. So what this tells me upfront is that this might be a good project. One, because these guys are the biggest holders. And you know, usually on Etherscan, you can tell Binance and other exchanges, they are required to put their wallet addresses there. So you can tell that the biggest holder that is locking up 23% is Binance. What that means is that this project cannot easily dissolve because Binance is quite solvent. Until Binance is insolvent, then you have to worry about this project. But this is just a very, very good example of understanding, you know, the ownership structure. This is another 1% that is owned by Binance again. This I already talked about. Coinbase also will have 1.4%. Then another one from Binance. It tells me that this is a strongly Binance project, or Binance has strong vested interest in the project. So for that reason, even though the price had not gone to all-time high, this coin is a good trade. One, because the circulating supply and the max supply is really very small, 10 million, very, very small. And because of that, when there's inflow of capital into a token like this, there's a rapid movement on the price. So this is just coincidental, as in I'm just using it as an example, but I think this is actually a very good token to buy because one, it doesn't have too much supply. Two, the people who are holding the biggest wallets are verified crypto institutions, relatively stable crypto institution. I mean, for now, Binance is relatively stable compared to everybody else. Binance is relatively stable. So this is a fair bet because again, if you check tokenomics and you check the ownership structure, you can see that the persons or the entities holding the biggest amount are not unknown individuals. If I checked that holders and I've seen a wallet with no identity sitting at the top, it's a complete deal breaker. And it's simple. I mean, it's very simple. An individual that has, the largest amount of token, maybe he was the founder or he was the biggest person that was their marketer, can decide to sell at any time and you can't hold him to it. And you can't hold him to it. So it's important to understand these basic, ways of checking up on projects because at the end of the day, I mean, it's investment. Whether we like to talk about it or not, it's investment anyway. So it's important to be able to do these basic checks and not to see, what the mix looks like. And I mean, another very interesting stuff is the volume in centralized exchanges versus volume in decentralized exchanges. So 1.6 million versus 4 million. So this has really become the centralized exchange token. So yeah, that's those are the two things I want to talk about in terms of understanding how to sift out rubbish projects. And of course, they already have an app now. They didn't have an app before. So it's supposed to be a native solution for credit and yield. So they have an app now. I hope it's a real app, and it's not the one I'll be asking for. Oh, okay. It's is a wallet app. So usually we want to connect to your wallet to initiate the. Okay, let's do it. Okay, I don't have anything in this wallet, so I think I can use it. Yeah. So once you connect the wallet, you are able to do a number of things with this platform: borrow, trade, and then make contribution to pools. It's like a DeFi platform. So, like I said, I won't be surprised if Binance has some serious interest. Of course, with the holdings there, they do have serious interest there. So that's what I wanted to talk about today. I don't know if there are any questions. I'm happy to take them before we close for the day. Okay. If there are no questions, I'm happy to release you for the rest of the weekend. We'll see you again next week. Next week, I think I'll talk about wallets once more. Just an overview about wallets.
Doc, just a quick one. Good evening once again.
Good evening, Albert.
Doc, you talk about node. So if they say those who run master node, those who run a master node, put your coin on master node on this thing. Basically, what does it mean? Is it the same as staking or something? Thank you.
So, okay, the concept of master node is actually staking, because what they're trying to do is to say that you deposit from your wallet, you deposit your crypto to another wallet. That other wallet is usually in an ideal situation. Let me not say always. In an ideal situation, that other wallet is either a server sitting on a server or a more powerful computer, and is able to carry out transaction on the blockchain of that particular token. So let's take Ethereum for instance. Ethereum moved from proof of work to proof of stake, meaning they de-democratized Ethereum, And as such, Ethereum has become an institutional grade cryptocurrency. Let me show you something. So Masternode is taking because you as a wallet owner, naturally would keep your crypto in your wallet. But if you have to deal with a Masternode, essentially what happens is, depending on the setup, and I don't want to go into some coins that we know, but usually the setup is such that you can have smart contracts that are written between the Masternode and your own wallet, which is essentially like when you do staking and when you put money in the pool. So what happens is when you post your crypto to that particular Masternode wallet, anything the Masternode wallet accrues based on the total number of people that are staking or that pulled in resources, the contract automatically distributes the reward back to those wallets that have contributed as the token is being generated or as the rewards are being generated. So it's important to understand that the concept of Masternode is directly opposed to the concept of proof of work, because proof of work means that your own computer with your wallet is directly doing the work and is connected directly to the network and is carrying out the work on the network. So if there are any gains from the work being done on the network, it automatically comes to you. A number of pros and cons. Of course, Masternode means proof of stake, which is essentially taking out the democracy from that particular blockchain. So there are a lot of arguments between Ethereum and the old Ethereum faithfuls that they shouldn't have done proof of stake. That is not what's that word now? What's that word? There's no inflationary and all that. Or there is not deflationary. Sorry, not hyper. It's not deflationary. But Masternode essentially is proof of stake. It's the same principle. And proof of work is when you connect your own device. And there are people that have even taken it to another level, like HNT token. HNT token generates tokens by proof of work. However, it has a special device that you need to plug into your network. So it uses that device as the node and then uses the network as consumption for power and for connectivity to drive the blockchain. I think we'll see more of HNT. Now that I brought it up, I probably should do that thing. You can, especially people in Nigeria, will probably benefit more than here in UK. Here in UK, you can't benefit because there's a lot of people that are already doing it. So there's I think on the HNT website you can get it, where you can buy the device. Usually what people do is they buy two devices, put one in their house, put one in their friend's house, pay for the internet, and then plug into that blockchain. So what it means is that in that area or in that domain, if there are very few people that are mining, that are mining HNT, those two people will get a lot of rewards because they'll be the only ones around in that area and they'll get a lot of rewards. I think I have to talk about that on a totally different day. So yes, in summary, my submission today is there's opportunity in the chaos, and we should train our mind to see differently. All right, everyone, have a lovely weekend. Hope to see you again next week. I'll talk more about wallets and smart contracts next week. Have a lovely weekend once again, and bye. God bless.
Good night. Thank you.
Thank you.
Bye.
Thank you. Bye.